Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is December 4th edition of Market Outlook in the year of 2016. All right, we had a very interesting week, massive rotation and switching from FANG stocks and NASDAQ stocks into the more industrial stocks, banks, and infrastructure. Let's take a look in detail and see where we're heading here. So first of all, taking a look, you can see we had a pretty tough week in most of the indices, and the NASDAQ 100 really got killed over the week, down 2.59%, while the Dow Industrials actually closed positive, but 3 out of the 4 indices down for the week. What was a little bit more disconcerting is the fact that we've now have more distribution days. In fact, on the NASDAQ, we've had 4 distribution days. That is definitely a warning that institutions are leaving. So the overall volume patterns not looking good. We seem to be swinging back and forth between euphoria and a little bit of panic. And in that case, you can definitely see we got this in the NASDAQ. So overall, 1 month action it looks pretty good for all of the indices. Not that great for NASDAQ overall. The NASDAQ 100 only up 1.46% for the month. That's quite a difference from the Russell 2000, which even after the correction is up almost 14%. So that really tells you a lot about how money has been moving at a pretty rapid rate from one type of asset or a different asset class to another. So let's take a look at what's happening in a little bit more detail, because you can see it in the sectors. So first of all, our strongest sector for quite a bit of time has been the semiconductors, and they really got shellacked. Over the last 5 days, the last week, it's been down 4%. And it was down even a bit more because on Friday, we recovered 1.6%. So from a sector perspective, I don't like to see leading sectors decline like that. And also, another thing that occurred is we lost the home builders having a positive 6-month return. So what we really like to see is the market moving up nicely, well above the 200-day moving average, which, yes, we do have, and the majority of sectors are improving, and that's not what's happening here. The home builders definitely took it on the chin, and as you can see, the 5-day movement was down 2.8% and putting the 6-month return to a negative column. So we've lost a sector with positive returns. So definite deterioration in the sectors. Now, what has happened as Trump has appointed numerous Goldman Sachs people to his new cabinet and to important positions, that the financials, the banks, are feeling pretty good that their former employees will be supportive to the industry. The other thing is infrastructure, transportation held up well also. So people, investors, still optimistic that the Trump bump into the domestic economy and our banking industry, infrastructure will continue to get support. But other deterioration occurred, and of course, the big sell-off in bonds definitely put pressure on things that are extremely interest rate sensitive. Okay, let's take a look at a couple of other areas of the market. We look at one thing that's interesting is gold miners. That had been on a huge tear this year and definitely hit a air pocket and corrected sharply. So the big question is there going to be a resurgence of that big trend that occurred in gold miners? This thing was up well over 100% at one point, and now you can see the 6-month return barely up, barely positive. Excuse me, it's actually negative here. It's down 5.4%. Meanwhile, industrial metals that are represented in XME, metals and metal mining, actually put in a positive week as well. Now, the interesting thing is that gold miners seem to be finding support as gold itself hit an air pocket and basically, since the big rally, continued to sell off this week. So looking at the gold miners as a leader here ahead of the gold bullion itself is something to keep an eye on. So potential rally forming here in the gold miners, and it may again lead gold itself, which is an interesting sign. So overall, infrastructure play in sort of the commodity sector is what's leading commodities, and interesting, at least a pause and some support to a overall bearish phase in the market, and that could turn pretty quickly here. So keep an eye on the gold miners, and obviously the metal stocks in general still looking extremely positive. Okay, so taking a look at the market internals, you definitely have a different view here of the market in general. So first of all, I just want to emphasize that the price action in the indices, especially the S&P and the NASDAQ, a little cause of concern. If you look at this, you now have an inside day pattern under the 10-day moving average. So one of the setups you can actually use here is a breakdown under Friday's low or Thursday's low, would definitely generate a sell signal inside day, sort of a compression pattern, and since the market fell under the 10-day moving average, a failure of this pattern here could definitely give you an attack down to the 50-day moving average. So that's the overall setup in the S&P. Now, a little bit more disconcerting is the deterioration, right, in up-down volume. We basically crossed this midpoint here. So when you get overbought and then cross the midpoint, that definitely generates, in my book, a negative read. Also interesting, McClellan oscillator, which looks at advanced decline issues over a month out and averages it out, basically sitting at the zero line. Sitting at the zero line after being overbought, not a good sign. If we get much lower here, that constitutes a sell signal. Now, another way we like to look at the market internals is looking at the advanced decline line here. So in this particular case, we did get overbought and flipped under our overbought levels. That definitely generates a sell signal as well. So we've got a scenario here where we're either at or have already generated sell signals on the market internals for the S&P. I look at this as a pretty strong negative at the moment. Okay, so now let's take a look at NASDAQ. And we know the NASDAQ 100 was very weak in the volume section, right, under distribution, and really has not done all that well since the election and hasn't participated very much in the Trump rally. It's only up about 1.5% over the month. That's quite a bit different than the IWM. So another thing here, as you can see, looking at the same indicators on the composite, we're much weaker, right? We're already beneath the 50% level in the up-down volume. We're already under, on the McClellan oscillator, the zero level. So we have more stocks under distribution than accumulation. more stocks declining than advancing, and that is also a negative. And we got overbought, right, and are now under our readings where once we're overbought, it turns into a potential sell signal. So again, the composite here is definitely under pressure from a market internals standpoint. Okay, so now let's take a look at some of the sentiment. Let's take a look at the new high, new low ratio. You got a similar scenario in the spiders compared to some of the other market internals. Again, new highs, new lows, sometimes a little bit slower to react to the market than the other indicators, but nonetheless, anything above 70% is considered positive. Obviously, we like to see the trend up or at least flat, so we're at an overbought area, starting to roll over, but not nearly that close to the 70% level, which would actually generate a bona fide sell signal for this indicator. So I give this one a positive, but moderated because of the fact that it's starting to roll over. But overall for the S&P, you can see the amount of new highs versus new lows really good on this rally overall. I'm looking at this again as more of a positive than anything else. Okay, so taking a look at the NASDAQ 100, looking at the new high, new low ratio as well. Slightly stronger picture, which is interesting because this is generally, as we've been looking at it, a weaker index as compared to the S&P. But from a new high, new low ratio, look, we're at a much higher level. We're at almost, we hit almost 90%. We're trading at 85%. You have some really good absolute numbers. So the issue here is we got at an oversold level and then moved back over the 30%, which generated a buy signal. We're on a buy signal. This is still looking extremely positive. Anything above 70 is positive. Give this a strong plus and be on alert because this indicator and these indicators have been moving extremely quickly. So you can always go to the website because it's updated every day to understand where these indicators are and how they're all setting up. So in this particular case, we're still on a positive, and until we get under the 70% level, we're on a positive situation. Okay, so now let's take a look at two sentiment indicators. So we like to look at volatility as our sentiment. Right now, as you can see, we're basically trading in the middle of a pretty wide band, right? We're sitting right here under the 50-day, under the 200-day, basically in this middle of the band here. This is a positive. We don't have any concern at the moment looking at the VIX. However, we do have another indicator on market internals and a sentiment indicator, and that is looking at short-term 1-month volatility versus 3. So you can see we moved up from an oversold or extremely pessimistic situation before the election, just before, and alleviated that overbought situation, oversold situation, and are now overbought and working off this overbought scenario. And again, I want to reiterate that we basically have this inside day pattern sitting right under the 10-day moving average. So with sentiment rolling over here and this inside day pattern setting up, we've got two scenarios. A breakout above the 2-day pattern, above the 10-day would put this thing probably back up for a test of new highs, or a failure early Monday or Tuesday of the 2-day inside day pattern could certainly generate a test back down to the 50-day moving average at a minimum. And again, this sentiment indicator looking at volatility short term versus a bit longer term, rolling over and basically breaking the threshold of positive into a negative. So overbought, turning down beneath the beginning of overbought levels, not a good sign. So in net, thinking about all of the different market internals here, volume, sentiment, and the up-down volume, new highs, new lows, and advanced declines. Overall, you've got a situation where it was running pretty rich, and most of the indicators are definitely turning over and giving us a bit of a cause for concern. Not all of them, but I would say 3 out of 5, or 60 to 70% of these indicators definitely showing signs of weakness. All right, hope this helps. See you next week, and stay frosty, because we're in a very, very touchy situation. Thanks, and bye for now.